Hello, my name is Paul Marriage from Tellworth Investments, and welcome to the HI European Market Neutral monthly video update for March 2022. So March was clearly a month dominated by the crisis in Ukraine. This was clearly much more difficult for people in Ukraine than people running money in London, and we never lost sight of that. So running money, we clearly had a very volatile market. We had a market which sold off very aggressively in Europe, probably more aggressively in Europe than in the UK. So actually running a pan-Euro fund with quite a large UK portion probably helped us here. Relatively, the UK market fared better with the UK market's energy exposure and perhaps physically a sense of further distance from Ukraine, which definitely helped versus, say, the German market, which, as we know, was not only physically closer, but obviously closer to the whole on-off gas energy crisis issue. So within that context, it was interesting to see quite a broad range of contributors this month. And remember, it was a month where we started off with peak fear, markets got very nervous, and then slightly as we expected, two things happened. People got more used to the idea of the war in Ukraine, sadly, and also the sense was that perhaps the worst case scenario, any scenario here is not great, but the worst case scenario wasn't as bad as those initial fears. And the fact that the sides have been talking, whether they'll be conclusive or not, is not for me to judge. But that does mean that in market terms, people are more comfortable, if you can be comfortable, with the prospect of war in Europe. So what worked for us? The biggest standout win probably was Trainline, where we'd done some good work. This is a UK train ticket booking app. Remember, we were short this last year and it had been a great short for us, and I think some of the work we did on the short made us want to go long. The bear case for the short kind of played out, and in fact people are getting back onto trains, and the future evolution of this business is all about how it can renegotiate with the government its terms, and it appears to be renegotiating its commission terms with the government. The government in the UK now owns the railways that used to be private post-COVID. And it looks like the commission terms are kind of okay. So big win there. That the shares are up nearly 40% on the month, and it was a good spot from the team. So it was a really good long to have in a tough month like this. We had quite a number of winners across the board. Other winners in the UK included financials such as Man Group and OSB, which rallied well off lows. And in Europe, Universal Music was good for us, and also Rheinmetall, which we traded quite well. Clearly, German defence stock. And the Germans are clearly spending a lot more on defence, and they will definitely be a beneficiary because the Germans will look to spend at home as well as abroad. Generally, that's defence stocks globally have been good, and we've always said that defence stocks have a role to play in the portfolio, and defence stocks also have a role to play in an ESG world as well, to keep us safe, to secure our natural resources, and sadly this month has really proven that. So if we look at the short book, what were the winners for us? Well, actually, in many ways, the winners in the short book were those slightly overvalued, growthy businesses again. So the kind of things that were good shorts at the beginning of the year actually were still pretty good shorts this month. So it's the growth stock like a Software One, other sort of struggling stocks in an inflationary environment like Royal Mail was a good short for us, having been a good long last year. And around those themes of difficult to grow, inflationary environment, maybe a higher rating in the first place, something like a Luceco in electrical goods. So those were the kind of short winners for us. Pretty broad portfolio. So overall, to have come through that period and made investors money. And actually, if we look at the whole quarter, the fund is up usefully on the quarter. We've got a lot more work to do in an inflationary environment. We get that. But in a period when we understand has been extremely difficult for other market neutral funds, we're delighted to deliver positive return in the first quarter of the year for investors. Clearly, the work starts now for us to build on that and have a strong second and third quarter as we go into the year. And things aren't going to get any easier globally and macroeconomically, probably, if things improve in Ukraine more quickly. Markets may rally a bit, but some of those same issues around supply chain, inflation costs, future energy security, they're not going away anytime soon. So, I think that's going to be a challenging environment. But as we've hopefully proven this year and in previous years, we don't mind challenging market environments. They're hard work. That's what we're paid to deliver on. So pleased to deliver a positive return, obviously in very difficult circumstances. And we continue to focus on meeting companies and picking stocks. And the team will work hard to keep finding new stocks for the portfolio. Thank you very much for your time, and look forward to updating you again in about 4 weeks' time.